a lot of people think, oh, the price traded down last week. But if you actually look at the exchange volume on Binance, which is probably the most liquid, greatest statistical example we have, on Black Thursday in March of 2020, Binance, that exchange traded $2 billion in an awful day, the worst day of the year by most people's recollections. On the day when, and it was around 5,000. On the day when MicroStrategy announced our purchase, August 10th, that exchange traded $1 billion of Bitcoin in the day. I think that exchange has traded up to $14 or $15 billion of Bitcoin on some days last week and traded $60 billion over the course of 6 days. And it's the bottom line. Bitcoin's up by a factor of 4. Liquidity's up by a factor of 5 to 8, even 10. And some institutions bought $60 billion of Bitcoin at a good price last week while someone got panicked over what I view as FUD, and they dumped it too cheap. So, I think what you see is that the long-term players are actually pretty happy to have the opportunity to get into this entry point. And if I was looking at it, the number one thing I'd always look at is the price moving on no volume or on a lot of volume? Because that tells you the institutional sentiment. Bitcoin's one of those stories where if you're only casually interested in it, you just look at the price volatility, and the deeper you look at it, the more you think it's like a generational or a decade-long trade. Last week, I think there are pros and cons. Clearly, there's a bit more volatility, and that would scare away weak non-committal players. But there's a ton of institutions that were very enthusiastic about it that decided they wanted to buy it when it was 30,000 around the beginning of the year. And then they watched to their chagrin as it doubled, and they thought, well, it can't double every quarter forever. It's ahead of itself. And then they stopped and they wouldn't buy. And so in circumstances like that, what you want is a dip where they get to get in at a very good price.
Michael Saylor, what has most surprised you about the changes? What's the biggest change in the market, in your opinion, since MicroStrategy bought its first Bitcoin?
What surprised me is that we've had a nonstop avalanche of good news. David Rubenstein, who's Jerome Powell's famous boss, endorses crypto. Larry Summers, the Secretary of the Treasury, endorses crypto. Goldman Sachs declares, they endorse Bitcoin, right? They're saying that this is a new asset class. Ray Dalio says he'd rather own Bitcoin than bonds, right? Coinbase comes public. An avalanche of really good news. And then I see the volatility in the market all based upon FUD. And the FUD is, first it was the Chinese are mining too much Bitcoin. And then the FUD was sell Bitcoin. And the second FUD was the Chinese are going to stop mining Bitcoin, sell Bitcoin. And then the FUD was, well, you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, the Chinese reiterated you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, IRS says you got to pay your taxes, sell Bitcoin. So, and that's the news cycle, right? So I feel like everything's working out great. I mean, if you'd asked me in August, do you expect to get the legitimization of Bitcoin like this? I wouldn't have, in my wildest dreams, expected so much good news to come. So I think it's going awesome. Just the market's volatile.
Michael Saylor, what about corporations? Do you see genuine concern there about Bitcoin's environmental impact?
I think the corporations would have the same thoughts that any other institutional investor has. I think they just want to be educated on the subject, and that's the key for us: provide education.
And that provides a very good segue. See what I did there? We can now talk about the Bitcoin Mining Council. Speaking of education on the energy footprint, can you give us some background on how that came together?
Sure. Well, Elon is a big believer in crypto technology as a force for freedom, and he's a big believer in Bitcoin as a long-term store of value, and he's expressed that sentiment in a number of ways, including taking a multi-billion-dollar position in Bitcoin. I think we all know he expressed a concern that he didn't want to see Bitcoin be the catalyst to bring to life dirty fossil fuels. And that created a bit of a Twitter stir. And that caused Bitcoin to dominate the news cycle all last week across the mainstream media. And I think it became pretty clear that that we have the Bitcoiners, we have a good story, but it's a very complicated story. And we need to find a way to share our story and to educate and get organized. So I think my first thought was there's no point in us tweeting back and forth at each other, because I don't think 280 character Twitters are right ways to educate the public and build consensus. So I reached out to Elon and I spoke with him, and we had a very long conversation. And from that, I asked him if he had relationships or had met with the Bitcoin miners. And Elon has expressed, right, on the record, he said he thought we would all benefit if we were able to publish energy usage and source of energy usage data. It turns out that Bitcoin miners don't actually have a good forum for communicating how they generate their energy. We don't have a shared common model for Bitcoin energy usage right now, and we don't have a future forecast model that we commonly use. So we're allowing other journalists in the mainstream media, or just anybody that wants to make up their own model. The most famous one being the boil the oceans by 2020 model that's going to cause the planet to overheat by 2 centigrade and kill us all. But and that's still ratcheting around, right? So we have some bad models, and I happen to have a fairly nuanced model. My view is that energy usage energy efficiency is growing exponentially. The S19 miners are increasing by a factor of 5 in energy efficiency versus the S9s, and between the halvings and the shift to transaction fees and the upgrade of the miners, we're going to see energy efficiency increase exponentially and energy usage decrease essentially. I don't think there's any models or any understanding of how that's working, and it's a fairly complicated subject. I mean, it would take me about half an hour on your podcast here. I don't think we could talk about it. But what I can say is I had some detailed discussions, and I asked Elon if he had relationships with the miners, and he said he'd like to meet them. So I reached out to the miners, and I asked them if they'd like to meet Elon Musk, and they said yes, they would. And so we set up the meeting because he wanted to understand how they're mining and what their plans and futures are, and they wanted to understand his concerns, and we wanted to understand how we could be the good guys in the entire ESG debate, because I think that Bitcoin they are the good people. We are actually driving sustainability. It is a great way to recycle wasted energy, and we have a great energy story. And so I think that the group came together to get Elon's thoughts, and for us to brainstorm on what we can do in order to communicate constructively to the entire industry and avoid reinventing the wheel, right? Because if there's 200 miners and each one of them has to develop their own model of the future of Bitcoin mining for the next 20 years and figure out what to say and who to say it to, and it gets pretty complicated, and none of them have a voice or a platform to get their message through. So I thought it was a very constructive meeting. I think we do have a great story. I think we're all committed to taking that message out to institutional investors and to refining it. And I think Elon's first order ask was, hey, can we come up with a way to publish or create transparency for Bitcoin mining energy usage? I saw something on Twitter today that suggested that Bitcoin is 2 or 3x as sustainable as other energy users. That's the kind of story we need to get out, but we need to legitimize it by having really good data. So